from cities like Ludhiana and Agra, which are amongst the top 20 Indian cities now, with a significant rise in number of millionaires. Countries like India, where in the last 5 years, we have seen a rapid pace of evolution.
There is a lot of tech, as you mentioned, that happens behind what we think is a very simple tap, right?
We have seen that we have about 350 million odd users of digital payments, and obviously UPI has the lion's share of that. Tap and pay, and particularly mobile tap and pay, is becoming the primary way to make payments.
Hello and welcome to a brand new season of Our Own Devices. This time we are going to again talk about a lot of new things in the world of tech and how tech itself is moving. You would not have realized it. And as we know, all the conversation is usually around AI these days. But there is a lot of tech, micro tech that you use every day and you don't realize. And we thought it's a great idea to start with maybe one technology we are using quite a lot these days, especially in India, and that is payments. And to talk about it, we have with us Sandeep Ghosh, who is the Group Country Manager of Visa for India and South Asia. Sandeep, welcome to the show.
Thank you, Nandagopal. Very happy to be here.
So, I gave a quick introduction, but this is something like we all use micropayments so frequently in India. I don't even remember the last time I had money in my wallet or I actually opened my wallet to take cash out. We have become, I don't know whether it's true for everybody, at least me, I'm a completely cashless person. So how do you look at this? Is this something very unique to India, or is this a global phenomenon now?
Phenomenon of world moving to digital payments is ubiquitous. It's happening everywhere. The pace at which it is happening, the manner in which it is playing out, varies from country to country. So at one end of the spectrum, you have countries which have today become nearly cashless. And the markets that come to mind are countries like the UK, Australia, places like Hong Kong and Singapore, Scandinavia, where the penetration of digital payments in personal consumption expenditure is as high as 90-95%. You then have, at the other end of the spectrum, some countries in the world, notably, say, in Africa and certain other parts of the world, where you still see a lot of cash. And then you have countries like India, where in the last 5 years, we have seen a rapid pace of evolution, where we have gone from being 85-90% cash economy pre-demonetization, pre-implementation of GST and pre-pandemic, to a market and an ecosystem where nearly 50-55% of personal consumption expenditure has now become digital. There is still a huge amount of cash in the system, which is ripe for displacement. But the pace at which this shift has happened, particularly in the last 5 or 6 years, is quite remarkable and almost unprecedented. So yeah, you when you look across the globe, you do have the digitization of payments, the democratization of payments happening at a very rapid pace, but it's just that it's not evenly distributed, if I could put it that way.
If you look at the democratization of digital payments, I guess India would be way ahead. Given that it's something you can now do literally anywhere in the country for any denomination of payment for any kind of service. Is that true, or again, am I just jumping the gun here?
No, you're not. UPI and the India stack has absolutely had a transformational impact in this market. No two ways about it. We have seen that we have about 350 million odd users of digital payments, and obviously UPI has the lion's share of that. You today have close to 40, 50 million acceptance points or merchants who accept some form of digital payments. Could be UPI, could be cards. The Besides UPI, I mean, the number of payments that happen over the RTGS platform, real-time gross settlement, the NEFT platform, IMPS, NACH. So, we've got a whole ecosystem that supports digital payments in the country. B2B flows, peer-to-peer flows, peer-to-merchant flows, government flows. So this is quite remarkable. But as I said earlier, we still have a substantial cash displacement opportunity in the country.
Yeah.
When you move out of the metros and mini metros into sort of the tier 3, tier 4 India, into rural India, you see more of cash there. And therefore, when you look at the transit payment systems in India, it is still largely cash based. If you were to take a bus, a train, an auto rickshaw, I'm talking of intercity travel and
Yes.
intracity travel. So there's a fair bit of cash in especially the intracity travel, local transport. So there's a lot of use cases. There's a lot of sectors. There are a lot of geographies where there is significant cash displacement opportunity, but there's also no taking away from the fact that the pace at which digitization has taken place in this country is phenomenal.
I guess if we're talking to Visa, or if we're talking to somebody in your position, maybe 10 years back, you would have really loved to be in a cashless, in a digital payment kind of a thing. But has it really panned out how maybe you thought about it 10 years back? Because when we used to talk about cashless, at one point it was then going into plastic and the card, right? But it's taken a slight pivot. I'm not saying the card has gone away, but it is a little bit different from how we envisioned it. So how are you looking at that transition? Or is this something that's going to be like, so both of them are going to grow side by side? How are you looking at that?
Yeah. So look, India is a very large market. It's a very complex market, and it's an ecosystem which will continue to support multiple forms of payment and
Payment,
multiple
yeah.
form factors. That's our firm belief. Now, you're absolutely right in the fact that there are a number of markets, India included, where the QR code has become like the primary form factor,
Yeah, yeah.
and there are other sort of geographies, other countries where the displacement of cash to digital happened entirely on the back of plastic and metal cards, right?
Yes. Yeah.
So we are a little different in that sense, and there are a number of factors for that. But just staying with cards for a minute, the fact remains that in India we have just under a billion debit cards and just over 100 million credit cards. Now, the number of credit cards in India is a fraction of what it is in China or Brazil, comparable
Yeah.
economies. I'm not even comparing
Mhm.
with the US. Even the 105, 106 million credit cards, less than 60 million cards are unique. So there's a lot of people who have multiple credit
Multiple
cards in
cards.
their wallet, right? So we do believe that there is a significant opportunity to grow and the credit card business in this country. Rising disposable income, the affluent aspirational class that is coming out there, people who are traveling extensively overseas. So even in India, if your default form factor turns out to be a QR code, that may not be the case if you're in the UK, if you're in Australia, if you're in Scandinavia, in Hong Kong, in Singapore, etc. So, depending on where you are traveling, the tap and pay, and particularly mobile tap and pay, is becoming the primary way to make payments. Um, so yes, I think you're right in your observation that the the evolution in India has gone from cash into QR code alongside card-based payments. But and that's not necessarily the case in every market in the world. And in India, we believe the size of the market, the different consumer needs and different use cases warrant that we have multiple payment systems. And
Yeah.
ultimately, it is in the interest of the ecosystem and consumers that we offer them multiple choices, because each of these payment forms have specific advantages across factors like convenience, speed, the level of friction or seamlessness of the payment. And in the case of cards, you have some very, very unique features like disputes and chargebacks. And if I make a payment to you, there is a trail, and
Yeah.
the ecosystem provides certain rules which govern how that payment takes place. And if you are in turn going to provide me a service or a product and there is a issue with that, there is a dispute and chargeback mechanism. There's a grievance redressal mechanism, which may not be there or may not be there to the same extent when it comes to real-time payments.
Yeah.
But there are other advantages in terms of cost where real-time payments score. So different formats and different platforms and different payment forms have specific advantages. And for a large and complex market, ultimately it's about consumer choice. That also leads to innovation. And then the market itself also goes through cycles. So something that is the default option today, 5 years from now, with the proliferation of, say, mobile tap and pay, things
Yeah.
could change. And we have seen that happen in some markets in the world.
It's an interesting point that you touched upon, that that the market is big enough to hold, um, uh, or it has space for different types of payments. But I guess the user also makes a lot of choice, right? Even between the payment modes. And you said, like, for instance, there, if you're using a credit card, it comes with a lot of backup, safety, security kind of measures too. I guess a lot of us make the choice that if it's a high value payment, you would not really maybe want to use a UPI for that. Are you seeing these kind of trends in the market?
So, of course, the propensity to gravitate to card-based payments when you are paying for something which is relatively high value
Yeah, given.
is a given. That's very true. But equally, Nandgopal, I would say that in countries where mobile tap and pay, card tap and pay and mobile tap and pay have become ubiquitous, and there is ubiquitous acceptance of cards, and the infrastructure supports mobile tap and pay, even for small ticket everyday payments, that form of payment is also very popular. And let me give
Yeah.
you two reasons why. So, think of yourself in a subway station trying to catch a metro train. Um, you know, um, there is no more convenient way to pay than just tap and pay. Because when you're
Yeah.
at a turnstile and there is a long queue of people waiting behind you, you are hardly likely to be able to scan a QR code, type a PIN, and go through with your
Yeah.
payment. You need to be able to do that in a matter of milliseconds with a
Yes.
single interaction, right? So it's when you look at metro systems and travel transit systems across the world, tap and pay is the preferred mode of payment, right? That's number one. Um, Again, in a lot of stores, supermarkets, now you have the technology for self checkout. You just don't
Yeah.
have cashiers, you don't have anyone standing there. You pick up your merchandise, you get to a checkout counter, in some cases, you don't even actually scan each individual item. You can actually put the
Yeah.
bag into
In a
some
basket or
in a
yeah.
basket, and it calculates the value. And again, then you either pull out your phone or your card and you just do a single tap transaction and you walk out.
Yeah.
There is nothing, there is no experience which is
Hmm.
more seamless, frictionless, and safer than that experience. So I've given you a retail checkout, or in a quick service restaurant, the McDonald's of the world, or in a cinema hall where there's a long queue of people waiting behind
Yeah.
you. That single interaction of tap and pay, be it on your card or your phone, is just the fastest and the most convenient. Same goes for transit. So, like I said, yes, intuitively, when people make payments of larger values, they lean towards cards. But when right infrastructure, the right technology is made available, then even for small ticket, everyday payment use cases, tap and pay is by far the most convenient way to pay.
I guess the way the market is moving, you're looking at these numbers, the digital payment, the tap and pay, all of that sort of, it's going to double, it's going to triple in the coming years. How is a company like, Visa going to leverage its infrastructure and technology to, to be, ahead of that kind of a curve?
So there's from a technology standpoint, there's a whole bunch of things that we look at as a company. First and foremost, it's pertinent for me to point out that um, for us, India is a very very important piece in the whole internal ecosystem. And the reason I say that is that from a payments perspective, we are pretty much like an epicenter where there's a lot of innovation taking place in the marketplace. Equally, we have a global capability center in Bangalore where we have over 4,000 people working, and they are doing a lot of cutting edge work when it comes to technology and innovation, not just for India and Asia, but for the rest of the visa world. It's actually our second largest sort of workforce outside of the United States, and a major center for us. Now, looking at it from another lens, we leverage technology in multiple areas. Obviously, the whole infrastructure that we have is built on the backbone of technology with, you know, 99.99% kind of availability,
Yeah.
and very high levels of resilience, security, which is warranted in a payments network. Um, we leverage technology from a fraud risk management standpoint. Over the last 5 years as a company, we have spent north of 10, $11 billion in technology. A lot of that has gone towards building various models for risk management. We've been leveraging artificial intelligence for many years. It's now a buzzword today, but it's since 1993. If I'm not mistaken, we've been actually leveraging AI for fraud and risk management, building
Yeah.
fraud and risk management tools and solutions. And then, given what we have seen in the last few years in terms of cyber threats, we not only see our responsibility as a leader in the payments ecosystem to protect our network, but we also work with a number of partners, governments, regulators, and ecosystem players to secure the entire payments ecosystem. Because when you
Yeah.
think about payments, it's important that the common man, common woman, the common user trusts the entire ecosystem. So we are extremely focused on protecting our own network, but equally securing the broader payments ecosystem, and collaborate with a number of players in a number of geographies to do that. And then, of course, there is the whole leveraging of technology to grow the business, which is where you're again using the latest tools and technologies to design the most innovative products, to do all the right analytics, to be able to come up with um, you know curated value propositions for different demographic segments, different socioeconomic segments. In some ways, we see ourselves as the world's oldest fintech company.
Yeah.
And long before the word became fashionable. And exactly as I said earlier, we've been leveraging AI for decades now. Obviously, um, the tools available, the technology available has gotten significantly more sophisticated now. But we've been working with all of this, and you know, deep down, we also truly believe in our strategy, which we kind of describe as being a network of networks. So there are a number of value-added services and solutions that we offer, which are deeply anchored in technology to support, ecosystem. We have, like a payments gateway, CyberSource that supports payments for all networks. It's not just for Visa card holders. And increasingly, we're sort of investing in more such capabilities, which will allow us to not just offer the best to Visa card holders, but in some instances to be able to offer more broad-based solutions to multiple players in the ecosystem, including at times our competitors. And we're perfectly fine with that.
You mentioned that India is such an important market, but it is, as you underlined, a very complex market also, right? With its own demographical challenges, like economic challenges. So, is it challenging for a company like Visa to keep all of this in mind while creating something for a market as complex as India? Or is that something that comes naturally to you because you are, again, the oldest fintech company in the world?
Yeah, so what you're describing as challenging, I'd rather see it as opportunities.
Yeah,
Like we often say this, right? Like, one of the mistakes that many uh, companies and institutions might make is look at India as one homogeneous market. It is not. And
yeah, it's not. It's
we recently did this very interesting study. We released this white paper about which is titled bridging the payments gap, and where we looked at the different ways in which payments is evolving and growing across different cities in the country. Cat A versus Cat B, Cat C cities, and it threw up some very, very interesting data. For example, in the 5 years leading up to 2023-24, um, there was a 4x increase in consumers in Cat C cities who spend over 2 lakhs annually on a single card. In that same period, the increase in Cat A was only 1.4x. And this is
okay.
a phenomenon which, in a way, is the democratization of affluence that is taking place in the country.
Yeah,
Um, in the same sort of study, we looked at the emerging tier two and tier three cities. And, you know, we saw data from cities like Ludhiana and Agra, which are amongst the top 20 Indian cities now, with a significant rise in number of millionaires, right?
yeah.
These would have not perhaps naturally come to mind, 5, 10 years ago. Um, the other sort of big shift that's happened in India is the growth of digital commerce and just how much of uh, these digital payment transactions are taking place online versus face to face. And at a macro level, today, 65% plus of our credit card transactions are actually happening in the digital online world
Yeah.
relative to the face-to-face physical world. So this is all the stuff that you and me and our families are doing on Swiggy, Zomato, Flipkart, Amazon, and all the other sort of e-com merchants out there. Um, and again, here too, between 2019 and 2024, the share of online spending in the Cat C cities jumped from 53 to 73%. So the delta that happened in Cat C is even more
Yeah.
than what happened in the top cities. And today, I believe that the leading e-com platforms in the country deliver their products to pretty much 99% of the pin codes in the country.
Yes.
That's how widespread their networks have become. And I'm not even talking about this other more recent phenomenon of stuff getting done in delivered in 10
5
minutes,
minutes. Yeah.
5 minutes and 10 minutes.
Yeah.
So again, when you see all of this that is playing out in this country, you do realize that this is a country of enormous opportunity where change is taking place very, very rapidly. And if you juxtapose that with, just the sheer momentum that comes from rising incomes, growing middle class, GDP growth, fair enough, it's not seven right now, but 6%. It's just sort of a huge opportunity. And obviously, to win in a market like this, which is also hyper competitive, where rightly so, the government has also invested in creating alternate platforms. Um, uh, it poses certain challenges, but it also calls for organizations to bring the best innovation, the best technology, the best security to play to be able to differentiate and win for the long term in this market.
So, if I can come to our last question, and it sort of stems again from whatever you have said.
Hmm.
You're also in a way saying that a concept of a one nation, one card might not work in India. But I want to ask you: is the concept of a physical card itself sort of uh, is it sort of redundant now? You said, like, 60-70% of the transactions are happening online, and you really don't need to have that physical card, right? Is is that something that Visa is working towards? I know uh, it is already available in a lot of markets, but India is still not there yet, right?
Yeah. So even in India, the notion of a virtual card is already there.
There,
And
yeah,
virtual cards not only work in a consumer context, but even for business to business
yeah,
payments. Okay. So that notion is already there I mean, that concept or the product or
yeah,
the offering of a virtual card is already there. There are players out there who don't actually issue a physical plastic or metal, and you actually
yeah,
get a credential, and based on that
yeah,
credential you can do transactions. So this is not new to India, it's already
yeah,
there. Obviously, you know you're right. 5 years from now, give or take, you could have a scenario where, because that credential is being saved on a phone or a device, and that becomes the mode with which you prefer to do your transaction, the physical plastic or metal becomes less and less salient or relevant, is something that could happen. And it doesn't frankly worry us at all, because at the end of the day, what we as an organization um, anchor our payment capability on is a credential rather than a
yeah.
physical
Physical
piece
card,
of,
yeah, yes,
and that credential tokenized is what gives you the identity,
yeah,
and the security. So that's sort of one piece. Having said that, again, it's never wise to entirely write off any kind of uh, form factor.
yeah,
So there will always be a certain segment of the population that might like to carry a physical card Because it could be a metal card which has aspirational value, which has a certain, if I could say, show off value. It also gives you the comfort that if you pull that out and use it in front of a merchant in a face-to-face transaction, it sort of provides a physical identity with a number, expiry date, and so on and so forth. So there are some people in certain situations who would always want to have that, and especially we're talking of the more sort of premium cards. People want to carry that. It gives you maybe a peace of mind, especially when you're traveling overseas. That's sort of one segment. But equally, there are digitally native consumers who might say, hey, I don't even want to carry a wallet. I don't want to carry a handbag in the case of a lady. And they are very, very happy storing that credential on a device, which today is more likely to be a phone, but tomorrow could be a watch or any other form of smart device, which is sort of has the NFC chip and so on and so forth. So we are completely agnostic to what consumers actually prefer. We would like to kind of give them the ability to pick and choose what they want, and the same consumer, like I said, may in a certain situation prefer to have a physical card. In certain other situations, when they're buying a coffee or when they're traveling in the metro, just pull out their phone and do and tap and pay.
Yeah.
So, again, it goes back to something I said at the very beginning. It's about giving consumers choices, and then the market will find its own level in terms of what people are preferring to use. And but certainly we do see the trend with the younger population, the millennials and the Gen Z, to move away from carrying wallets and handbags, and therefore they don't even have a place where you can put that physical
Card anymore.
card anymore. So for them,
Yeah.
mobile is the preferred
Yeah.
device. Yeah, and this is a phenomenon we see globally. Our global experience shows that obviously the younger generation gravitates towards mobile tap and pay very, very quickly.
So I'm sure Sandeep, our listeners would have been really enlightened today. Again, there is a lot of tech, as you mentioned, that happens behind what we think is a very simple tap, right? And again, it has to be done at real time. It has to be run. It has to be done with the highest possible security and safety. So understanding how this works and how the market is moving in this space, it was great to have you on the show.
Thank you. Thank you so much. Really pleasure talking to you, Nandagopal. Thank you for having me.
So you were listening to another episode of Our Own Devices. We'll be back again next week with another guest and a lot more knowledge and insight.